please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. So pressure continues as far as Asia is concerned, and we've got about a 30-35 point cut on the SGX Nifty. That's the picture of the morning so far. But right now, let's get you some important market opinion. In an exclusive conversation with Shireen Bhan at the Rising India Summit, Ruchir Sharma, the head of emerging markets at Morgan Stanley Investment Management, says investors are waiting for India to become the next China and that there are still enough opportunities out here.
My thing is that this country is forever rising, whatever you want to sort of make out of it, right? So that it's on a continuous sort of upward march, but it's a sort of chaotic march, and for every sort of positive story, there's a negative story. You have these incredibly good Indian companies that have given a lot of value back to investors, and they're very high quality in terms of, if you look at the metrics like return on equity, consistent earnings growth, India ranks right up there compared to any nation in the world if you take it as a share of the total companies listed out here, which is quite large. So it's a country that we always want to be engaged with.
Sure.
But obviously we keep looking at the fact that what more could be done for India to have, become like the next China.
Is it harder to find value in India today, given where prices are, given where valuations are?
The biggest cliche in the world I find is that the easy money has already been made, right? Because you look back at the past and you find that it's been done. So I don't think that, there's always going to be opportunity out here. Yes, the fact is that a lot of optimism had crept in and some of that optimism is getting deflated very quickly. But I don't think that this is ever going to be a market which is going to sort of just tank and be like Turkey and stuff. I see enough opportunities. I don't think that, that we are sort of sufficiently engaged. We see enough opportunity. There are enough high quality companies available out here.
All right, see enough opportunity in high quality companies, the word coming in from Ruchir Sharma. But back home on Dalal Street, the bears took control with the key indices losing 1.5% each. In fact, the Nifty also breached the 10,200 mark. The Sensex ended with cuts of more than 500 points on Friday's trading session. The mid-caps slightly outperformed with the losses of 1%. However, the advanced decline was in favor of the declines. The banks again took a hit of almost 300 points. So we're perilously close to that 10,000 to that 10,161 mark, which is the 200-day moving average. What happens today? Well, Naveen joins us now. Naveen, what are the cues you're working with?
So cues, if I were to say, aren't very positive, Mangalam, given the fact that if you see on Friday itself, we had seen a strong beating down, majorly not because we were underperforming the global indices. Why? Because of the political uncertainty, and going ahead into the election season, there seems to be a lot of uncertainty, and that had taken a toll on Friday's trading session. Now, talking about the macro data, that is also not something which came in during the weekend, which is something to cheer about. So the current account deficit, that has come in almost 2% of the GDP. This is giving a rising trend at around that $13 billion mark, given the oil prices which has been spiking up. So some bad news for the overall market itself. Talking about the levels, as you clearly pointed out, that 10,161, that is an important level that the street will be clearly watching, given the fact that also, and on the upside, 10,350, 10,370, that is where some resistance will be seen. On the other hand, support will be seen at the 10,161 level. One is the 200-day moving average. The other one being that the put shedding, that has come in at around the 10,400 level with a premium of close to the 220 rupee mark. So keep an eye on that, around the 10,160 and 10,180. A breakdown below that will be some bit of a problem. A tad bit of a good news has been the future premium, which has expanded to around 37 rupees. Also, the global cues were fairly positive, but SGX Nifty indicating an opening around the 10,200 level as of now. Back to you.
Perfect. A bear cocktail, it looks to me, on this Monday. But anyway, let's get down to stocks, Naveen. What's on your radar?
A lot of stocks which will be buzzing on the back of the order wins. So I'll begin with PNC Infra. PNC Infra has got an order wherein they have bagged it worth around 1,200 crore. Nevertheless, a good thing for the company, given the fact that they have been starving for them for the last 6 months, if I remember correctly. On the other hand, Wockhardt company has clarified that they are FDA licensed for October 15 for 2 of their drugs. That has been coming in. On the other hand, Thermax Group has also received an order worth around 500 crore rupees. Not a huge amount, but but nevertheless significant given the order scenario right now. Sadbhav Infra is also one stock which will be in focus on the back of an order win. Declared an L1 for a 8-lane road in their core area, that is around Gujarat. The total size is around 1400. Remember, the management also telling us that they will be expecting more of them coming in around that 4,000 crore mark. Also TV Today and ENIL, the board will be meeting tomorrow on 21st. Basically, one is their radio business will be transferred to the TV Today's radio business will be transferred to ENIL. Wasn't a very significant contributor to the overall revenues, nevertheless important given it was an important arm. On the other hand, Sona Koyo, JTKT is selling around 50 lakh shares of the company. Z Entertainment, some bit of a bad news according to Sonal. What she believes is that the company has terminated the acquisitions plans of 9X Media. Remember, the total contribution to the ad revenue to the revenues was around 2% from this acquisition if it would have materialized. On the other hand, Shilpa Medicare is also one stock which will be under the radar given the fact that the US FDA has intimated the company has inspected classification for their EIR. EIR has also been received. Ashoka Buildcon is one stock which will be in focus on the back of an order win. So these are the stocks and news from my side.
As promised, we're getting you snippets of the big Rising India Summit that took place over the weekend, and this one comes from Nobel laureate Paul Krugman. The three most important points that he made this weekend. The first one, that you cannot become Denmark by having Chinese levels of corruption. Second one, Donald Trump, he doesn't think is taking his job seriously. And third, most importantly, he still believes India is a marvelous, encouraging story. The future looks better than the past. Here is a chunk of his conversation with Lata Venkatesh.
I think the thing to understand for global politics and so on is that his vision of the world, such as it was, is the way the world was 50 years ago, when he was a young man, and he hasn't caught up with this modern globalized world that we live in.
Okay. No, I'll tell you, on a more serious note, the point is, he did come with promises to a certain category in America, people who had lost jobs.
That's right.
To, the shifting of manufacturing to China. But a lot of people thought that he won't implement those tariffs. But as time passes, he has remained true to all those election promises, and what looked like impossible is actually coming true.
Well, a little bit of it has. Now, we still don't know. I think he probably doesn't know whether he's doing a few dramatic things to make it look like he's doing what he said he would, or whether this really is the start. I mean, America, big country, but we're still very embedded in this global economy. There's no such thing as a U.S. product. Everything is a global product, and business doesn't want to see that disrupted. And that's a counterweight. On the other hand, yes, he made a lot of promises. Basically, that I'm going to bring back the manufacturing jobs that we had 40 years ago, which is not going to happen, but he may be tempted to try some extreme measures to do that, and the steel tariff was certainly a start in that direction.
We missed the bus when the Asian tigers and China got into the global manufacturing cycle. What should India do now? Can we get into the cycle now?
I think India can. I mean, now, in some ways, the success of Indian service exports worked against manufacturing. So it has kept the rupee stronger than it would otherwise have been. And it means that India has not been as cheap a place to produce as you might have expected. But on the other hand, India has this enormous wave of people coming along, so it needs to employ them. And India still has reasonably low wages. Productivity is low, but not as low as some other places. I think infrastructure used to be a big issue, transport infrastructure. It's gotten better. Still not first class, but it's better. So why not? I mean, you have neighboring economies that are major manufacturing centers. They're even poorer than India, but there's this. I would say, let's put it this way: a successful Indian future would include a lot more manufacturing being part of this global manufacturing system.